Hello and welcome to another edition of the Friday Market Update. Hope you had an amazing week. Frustrated. That's the one word that comes to mind regarding the direction of mortgage rates. And why am I frustrated? It's because of the huge discrepancies in the jobs data month over month. It just seems like it just keeps going and going, and it's incredibly hard to reconcile. So nothing jives, nothing lines up. So this was clearly evident with today's release of the BLS jobs data compared to the ADP jobs data released on Wednesday. Now, the Fed has a dual mandate. They are tasked with achieving maximum employment and keeping prices stable. So last week, we spoke about the two drivers of the economy and interest rates, inflation and jobs, those two things. So both inflation data and jobs data comes from two different sources. Inflation data comes from the CPI, Consumer Price Index, and that's released by the U.S. Bureau of Labor Statistics, and the PCE inflation stats, personal consumption expenditure, come from the U.S. Bureau of Economic Analysis. Now, the good news, there is good news, even though inflation is going up. The good news is that while these reports put different weighting on different economic data in the economy, they have been pretty darn consistent and consistent enough to believe. So the Fed relies primarily upon the core PCE inflation index for decision making on whether to raise or lower Fed funds rate, in addition to the jobs markets. So the markets believe with a pretty high level of certainty that the inflation figures are pretty accurate gauge and reliable for the most part. Now, that absolutely cannot be said about the jobs data whatsoever, the other key driver of the economy. So as discussed last week, inflation is stagnant right now, not showing any clear signs that it's going to drop anytime soon down to the Fed's target for inflation of 2%. So it looks like it's going to be a long, slow decline, and inflation could possibly even go up a little bit later this year before it starts to go down again. We can accept this because the data is clear. The other factor that can impact rates is the jobs market. So the reliability of the jobs figures is a completely different story. The primary jobs figures are released by ADP and the BLS, Bureau of Labor Statistics. The ADP National Employment Report is an independent measure of the change in the U.S. private sector from actual payroll data of approximately 400,000 U.S. businesses. So again, I want to stress, it's actual data and much easier to rely upon. The downside to the report is it does not capture the government sector for job growth and job loss. So it kind of excludes that factor. So now the second report on jobs is the BLS report. And it appears to be so unreliable, it's just hard to take serious. And yet this is the report that Wall Street relies upon and the Fed relies upon to trade, not the Fed to trade stocks, but the Wall Street relies upon to trade stocks and bonds. But what makes it so unreliable? So a lot of the data is gathered by surveys. They send out surveys, they expect it to come back. Well, the survey responses have been declining. That's not good. It could also be that respondents are just unwilling to participate or hesitant to provide all the requested information. It takes time. So thus the data quality is suspect. So the government has to make assumptions and observations from the data that they get and impute the results, which can vary significantly every single month and is so less reliable than the ADP data. So there are also two components. This is a long one. So there's also two components to the BLS report, business survey and the household survey. Now, the household survey came out this month today and showed 408,000 job losses. That's losses, while the very imputed data from the business survey that the BLS puts out showed 272,000 new job gains. And they were expecting about 185,000. So this blew the expectation out. So I'm like, what the F, if you know what I mean. So personally, I don't think the economy is nearly as strong as what the government is reporting. And there are so many other head scratchers in the report that would just take too long to go over. I'm on my rant. So if you want to nerd out, go through that, call me. I'll just kind of go through a lot of the numbers in detail if you want to. So all that said, and that was a lot of huff and puff there, we can't do a whole heck of a lot about it. Wall Street is not likely to go against what the government reports, so it turns into a waiting game once again. Meaning, we may not know the real job numbers until months and months down the road. We just have to wait and see what happens. So it just keeps everything stagnant. And that's why we're talking about rates, higher for longer. So we have to go with the flow. And it doesn't mean we can't be frustrated, because I'm frustrated. I'm sure you're frustrated. And it gets a little bit crazy because the rates, in my opinion, should be lower by now. So back to the rates. We're going to probably go sideways and be prepared for this to be the norm for probably the next 3 months. Who knows? It could potentially go up a little bit too. But in the final countdown to the election, that's a wild card. What will that bring? What will happen? Will we see rates drop because of that? I don't know. Now, on a brighter note, because I am usually pretty positive about things, according to Altos Research, Nevada was previously the only state that had less inventory in 2024 than in 2023. And that just flipped, meaning there are now more homes on the market in 2024 than there were last year. So the good news is home buyers now have more homes to choose from and consider. And we should see a bit, in my opinion, of a flattening of appreciation. I don't think they're going to skyrocket. That would be when the rates drop. That's when they're going to skyrocket. So get your buyers out there. I think they have an extended period of time to potentially get into a home without the value going up a ton between now and when rates drop. So as always, feel free to reach out to me directly to get your buyers pre-approved and educated so they can make the right decision for them. I'm really good at making it as simple as I possibly can. You can also send them to my calendar link where I will go through a free CIA analysis, credit, income, asset, so they know exactly where they stand right now and what they need to do to get a game plan together to get into a home. So let's run their numbers. I hope you have an awesome weekend, and we'll see you next week on the Friday Market Update. This is Gaylord out. Bye, everybody.